Hello everyone, thank you for joining us today and welcome to this presentation of Emini Strategies for bull and bear markets. Now this promises to be a really great presentation because today I'm going to share with you a couple of rules to one of our best strategies. In fact, if we look at this chart here, this current chart of the Emini, this is a 15-minute chart of the Emini just around a month ago. Someone looking at this would say, well, roughly we're just going sideways in the last hour or two. There's no real direction of the market. But I'm going to share with you two rules that you could have spotted a buy signal actually right here and then been well ahead of the game before the 12-point gain started. So this promises once again to be a great presentation. Welcome once again. My name is Steven Primo, and I'm going to talk about all these strategies and how they lead into a great package we have for you. It's our Elite Emini Trading College, which actually will start within the next week or so. So my name is Steven Primo, the president and founder of Specialist Trading. Thanks for joining us today. If you've been trading for a while, you've most likely seen our presentations in the past, but if you're new to what we do on a weekly basis, Specialist Trading is all about educating you. Okay, we are first and foremost different from other companies because we are an educational company. Our sole purpose is to educate you with all the things I've accumulated in my trading career. I've been trading for 4 decades now. I started trading on the floor of the Pacific Stock Exchange for 16 years. I was down there, and I was also a specialist for 9 years. A specialist simply made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular equity, the broker would get the order over the phone and then walk up to the specialist who made the market in that particular market. So I did that for roughly 9 years. I traded on the floor during the crash, during the bull market that followed, and I left the floor in the 90s to manage money to pursue my own trading. About 8 years ago, I teamed up with Pro Trader Strategies and we formed our educational companies. Our two companies provided together this education for all of our members in roughly 110 countries around the world and in virtually every state in the United States. So we just provide our students with the things I've accumulated that have a high level of consistency. We're not promising the world and telling you that, oh, the minute you trade one of our techniques or strategies, you're going to be a millionaire or buy your dream home in the first 6 months the way some other websites do. We don't believe in that. We believe that once we supply you with the education, we're trying to get you to become a consistent trader. That's what really gets you on that road to consistency, making your own decisions because now you have the information and the knowledge behind that. So that's what we do. And as you'll see in today's presentation, I'm going to give you a lot of information and show you how much attention we give to actually educating you. But before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results with a number of our strategies today and showing you exactly how they performed in the last actually couple of hours. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin today's presentation. And also, if you haven't done so already, I would like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there at SPCLSTTRADG. You may want to copy that down because every day I post different information from different techniques that we are currently using to strategies, signals, to actual bits of wisdom along the way. So lots of things to follow us on Twitter with and a lot of great free information there. Now, before we begin, once again, I really want to share with you what I have learned on the trading floor because I've made no secret about this. Even though I've been trading for 4 decades, my first couple of years, I struggled tremendously. In fact, probably unlike a lot of what many of you may be going through right now, because trading is very difficult if you're not supplied with the right tools and knowledge. Now, I did the same thing that I would say 99.9% of most traders do. I read all the books, I went to all the seminars, and learned all the conventional wisdom about things that are supposed to work that, supposedly have stood the test of time. And guess what? It didn't make me a dime. I learned all about volume, all about institutional trading, all about support and resistance, Fibonacci retracements. I followed all the news, all of the reports coming out, and nothing worked in terms of consistency. Sure, it would work every once in a while, but then that one time it didn't work, I'd give everything back. And I know how discouraged you are and you may be feeling because I went through the same thing. But here's what I learned on the floor, because I was lucky enough to come in contact with a few mentors. These were specialists themselves who have been trading about 40 years themselves each. And they saw how much I was struggling. And they said, Steve, this is what you need to know in order to become successful. And by successful, they meant basically be consistent. They said successful trading should be non-subjective. Okay, so what does that mean? Well, it means that two traders should be able to look at the same chart and come up with the same scenario. Okay, but how many times have you talked to someone who trades and says, oh, the market is really bullish, and you'll think, boy, it looks like the market is topping out to me. This is the way most traders trade. Everyone has a different idea because you're bringing different issues to the marketplace. So trading shouldn't be that subjective. It should be more cut and dry. So if people are taught the correct way to look at the market, they'll come up with the exact same scenario, regardless of what the market is, regardless of the time frame, regardless of the direction. So we don't want subjectivity to jump into our trading. Secondly, trading should be consistent. Now, obviously, everyone wants to be consistent, but what does that mean? Well, consistency is a kind of stair-step approach. It means we're not going to expect our equity, our P&L, to look like as if it goes straight up. All right, we know that's not really sustainable, and very rarely do people just have winning trade after winning trade after winning trade. And most likely, when people do have scenarios like that, they usually give it all back. What we want is a stair-step approach, 2 steps forward, 1 step back, because we know that it's only natural we're going to be taking some small losses from time to time. But as long as we can manage them, as long as we know that to take small losses and that our ideas and knowledge is consistent, it'll sustain us. So trading, successful trading should be consistent. 2 steps forward, 1 step back. Or there's nothing wrong with taking a small loss from time to time. Successful trading should also be as simple as possible. Now, this is something that really, it's funny because if you look at traders, a lot of webinars and educators out there who say they've been trading for a while, usually they've been trading for maybe 5 to 10 years. And that's really relatively a short time to be trading for all intents and purposes. And most of these traders, these educators, or so-called gurus who've been trading for that short amount of time have very complicated ways of trading, convoluted logic, a lot of high-class indicators that you don't understand what they're based off of, or systems that you don't understand how to trade them. It's extremely complicated. But if you look at the traders who've been trading 20, 30, 40 years, most of their techniques and methods are extremely simple. They're the exact opposite. Maybe 4, 5, 6 rules tops, maybe 1 indicator. And that's what has sustained them. So it's not that they're trying to be the contrarian to the majority of the people trading. They know what works, and what works is keeping things as simple as possible. So look at your own trading. Do you have a ton of rules? Do you follow every trading guru? Do you go to every website to see what everyone else is doing? Tons of indicators. It's too complicated. That's why there's no consistency. Make it as simple as possible. And then lastly, my mentors taught me what I feel is the most important of all of these categories, and that is successful trading should make you a part of the process. All right, so what do we mean by that? Well, look at your own trading. Look at your own trading decisions. What are they based off of? All right, every morning before you trade or before you make a decision, do you go to some website to see what the signals are? Do you go to a chat room to see what everyone else is trading and what their ideas are? Do you wait for every news event to tell you whether you should be long or short, whether it's a good buy or a good sell? Do you watch the trading gurus on TV to see what their opinions are? Do you see how you're taking yourself out of the game when you rely on these things to tell you how to trade? Trust me, I know from firsthand experience. It's exactly the way I used to trade, and it didn't make me a dime. Okay? My mentors taught me, what they said was, Steve, get rid of this useless noise. When most people think that that's actually helping you, it's doing the opposite. It's keeping you away from your success as a trader. So the minute you start letting go of these things, that's when you get on the road to consistency. And I know it's difficult. It takes a lot of courage because we've all been trained that these are the things you have to use. And it was tough for me because I was born and raised on news events thinking that that's what determined what a stock was going to do. But when I finally grasped the concept and let go, that's when my trading started to become consistent. And I think it's been these 4 categories here that have been able to sustain my trading by applying these on a daily basis. So this is what we give to all of our students. This is what I'm going to be teaching all of our members in our new and upcoming Emini College. all of these different subjects and techniques and categories so that you can get on that road, okay? Now let's talk about what's offered. And my goal, remember, once again, is not to force feed you signals. What's offered in the course is a lot of teaching, a lot of training, but we're not going to force feed you and tell you, well, this is what you have to buy tomorrow. This is what you have to sell. This is the perfect time frame. As you see here, my goal is not to force feed you signals or force feed you the right time frame. That's up to you to decide. My goal is to teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around, and it has sustained me for 4 decades. This is the same edge I want to reach out and give to you. So hopefully you can be trading 20, 30, 40 years down the road. Okay? All right, so let's go in to see what's offered in the Emini College curriculum here. Week 1, we're going to talk about the foundation and the building blocks of Emini trading. We touched on them a little bit just a few seconds ago going into our philosophy, but we'll give you a lot more different techniques and ideas about how we feel you should be trading. Week 2, we go into the strategies, what everyone looks for. We're going to one of our best pullback strategies, which is strategy number 1. We teach you all the rules plus how to trade it conservatively and aggressively, okay? Once you've learned that, we give you assignments on what to look for on strategy number 1. We move on to the next week, which is our most consistent strategy and most popular, by the way, strategy number 4. I'm going to show you a couple of rules actually to strategy number 4 in just a few minutes. We go over how strategy 4 can work in any market in any time frame. And then once we have that down pat, we move on to the next week, which is Emini Strategy number 7. A great strategy. It's mainly geared for trading on daily bars. I'm going to show you a few examples of that, all right? After we've got the strategies under our belt, we move on to a great tool, probably the most popular tool we have at Specialist Trading and Pro Trader Strategies. That's the PET-D. It's our short-term directional tool. It's not a strategy. It's not a system. It's just a very finely tuned way to know what the trend is on the short term and even long term. I'll show you some examples in just a few minutes. And then finally, in the last week, we put it all together by talking about advanced trading management, which is a great technique I learned on the floor of this exchange. And then we put it all together with any questions you may have. But it doesn't stop there. Once you are a member of any of my courses, you're a student of mine for life. You can always email me and contact me, okay? Even though these classes are going to be live, once they end, you can still contact me via email, and I will get back to you as soon as possible. All right, so let's talk about some of the tools and techniques that we're going to be sharing with you. First of all, let's look at edge number 1. Now, this is a simple tool designed to place you on the right side of the market. So it doesn't matter what time frame, if you like to trade tick charts or if you like to trade monthly bars. Absolutely makes no difference, but this will give you a higher level of consistency because you know you're on the right side. For example, if we look at this 5-minute chart of the E-mini, now this is a perfect example of the way most people trade. All right, the market opens up, it gaps up, and then it starts to go up higher, but let's say you're in some chat room or some guy you're talking to, trading along with on the Squawk Box. He says, all right, we've reached some type of resistance. There's some, this is where the institutions are selling, or this is some Fibonacci resistance. So we have to sell here, okay? So you say, okay, well, they're always right, so I guess I should sell too. So you sell, and look what happens. It goes up even higher, right? This is the way most people trade. Why? Because they're on the wrong side, I should say. They're not on the right side, they're on the wrong side. So this is what we're going to share with you, this great technique that is so simple but so powerful as well. How about edge number 2? We're going to talk about a technique designed to fine-tune your entries, resulting in very high percentage trades. Now, oftentimes I've seen a lot of students and members that come to our courses say, you know, I usually have the right idea, Steve. It's just my entry is wrong. I get in at the wrong time. I get scared. I get stopped out, or else I, getting too late. Well, let's look at this example. Another 5-minute chart of the E-mini. Now, even though I'm looking at intraday trading here, we're going to cover all time frames, daily bars, weekly. It doesn't make any difference. All right, so looking at this right here, let's say that your plan, your method calls for you to be selling because you're looking at this area right here. Everything matches up, and you want to be going short the market. All right, so you wait for this to break here, and that's going to tell you that the support has been broken and you're going to sell. So on the very next bar, you break and close below that low, so you sell. And then look what happens. It goes up, okay? Now, it's not always that you're wrong, because oftentimes it will go in your right direction, but oftentimes it's your entry that is faulty. So what we do is show you this fine-tuned way to enter that will oftentimes, get you in at a better spot. For example, it would have gotten you in on this bar to go short instead of the first one, and then, well, you see, you were right in the first place. You just got in a little bit too soon. All right, so this is a great, great technique for fine-tuning your entries. We're also going to talk about stops. I should say exits. Exits are great, but most people get out too early. This is one of the great faults of so many traders, especially beginning traders. They get out way too early and they watch the market take off. Now, there's nothing wrong with taking a profit at a very, early time. It's okay, but if you'd like to gain more, a bang for your buck, there are different ways to execute our exit strategies. For example, here's another example of a signal that was generated, a buy signal. With one of our exit plans, you could have taken a quick profit here at exit level number 1, or a more moderate exit here at exit level 2, or a more advanced exit here at exit level number 3. And we'll share all these with you, as well as more places to exit along the way. All right, now we talk about stops. So many people are interested in stops, but most people have very basic ways to enter stops. They say, well, I'm risking only $200 or $300 per trade. Okay, we never really feel that that's a proper way to place a stop, because the market doesn't know how much money you have, and so you should be basing your stop off of market patterns and locations, not off how much money you have to risk. So we tell you different stop placements. In fact, we give you 4 initial stop placements. We also give you 3 moving stop placements included with that, okay? Now let's get into the strategies. I know this is where a lot of you are more interested in than anything else. With the strategies, we have basically a basic format that we give everyone, okay? So everyone, regardless if you've been trading for 30 years or if you've been trading for 30 minutes, it doesn't matter. Everyone is going to be presented with the same basic format. And then from there, we go on to different elevated ways to match and meet your needs. So if you're a conservative trader and you like to trade strategy number 1, but you're conservative, we show you how to do that. But you're an aggressive trader and you like to trade it more aggressively and trade with a large risk, well, we show you how to do that as well. So we all start with the same basic format, and then we move on from there to meet your needs. Because remember, ultimately, you have to decide how you want to trade, not us. We're just giving you things that have stood the test of time. Let me show you what we mean here. Let's look at our most popular as well as consistent strategy, strategy number 4. Now, who is strategy number 4 for? Well, it's for traders looking to catch quick momentum moves. This was the first strategy I was introduced to when I was on the floor, when my mentors taught me how to trade. I was, once again, trading off news, trading off breakout highs, breakdown lows, and they said, listen, Steve, there's no consistency. Those things will work every once in a while. Here is a great trading method. So when we traded this on the floor, we were trading stocks for 5 minutes at a time, so we'd be in and out of something in a matter of minutes. So it was originally designed for traders looking to catch quick momentum moves. But once again, we show you in this course how to sustain, long trends if you'd like. So you don't have to be in and out in 5 minutes. You can be in and out in a couple of weeks if you'd like, or a month. It's up to you. It's for all students, from beginners to advanced. Doesn't matter if you're a hedge fund trader or you just started trading. Everyone gets the same basic format. It's a pattern recognition strategy. Now, I can't divulge what the pattern is because it wouldn't be fair for the people who have spent good money on this already, but it's a specific pattern I was taught on the floor that we look for, okay? Now, its intensity level from 1 to 3, if 1 was the most intense of all strategies, if you couldn't leave your computer, and 3 was the most relaxed, it's a very moderate number 2. So it's right in the middle. Now you can apply this to any market, any time frame, any direction. That's the beauty of this strategy. But remember, our edge is consistency. I don't want you to think that every trade's going to be a winner. It doesn't work like that. Nothing in life works like that, okay? No athlete makes a basket every time they shoot the ball or hits a home run. No entertainer or artist has a gold album or a hit movie every time. But it doesn't mean that their career is damaged. It just means that it's one step back. Now it's time to go forward again. And that's the beauty of all of our techniques. Even though they might experience small losses from time to time, they're very consistent and able to make it back, sometimes in a rather short time, oftentimes in the very next trade. All right, so Let's look at the two main rules of strategy number 4, and then we'll go into some examples that show you exactly how to implement these rules. Rule number 1, we're going to look for bars that close in the top or bottom 25% of the range. All right, so I know a lot of you are saying, like, well, what does this exactly mean? What do you mean by range, from open to close? Well, let me share with you what that means. Let's say this is a daily bar, okay? What you want to do basically is just measure the range from extreme high to extreme low, divide by 4 separate but equal parts, and if you close in that top 25%, well, then the market is giving you an indication to buy. That's how simple it is, okay? I know a lot of you say, well, Steve, I don't trade open, high, low, close. I trade all candlesticks. All right? Absolutely makes no difference. If you have a candlestick bar like this, a daily bar, you do the same thing. If you close in the top quarter, taking the extreme high, the top of the wick to the bottom of the wick, divide by 4, that's an indication to buy. So there's absolutely no difference, okay? So if we look at this generic chart right here, well, these are the 3 bars that closed in the top 25% of their range. Now we can do the same if we're going short. If we look at this daily bar here, all you have to do is divide by 4 separate but equal parts from the extreme high to the extreme low, okay? If you close in that bottom 25%, the market is telling you, not some guy in a chat room, not some guy on TV, but the market, the only thing you should be listening to is telling you that's an indication to sell, okay? What a great edge to have coming from the source, not coming from some guy on TV or some course, but coming from the actual market that you're trading, telling you what it wants to do, okay? Now, once again, it makes no difference if you trade candlesticks. You measure the extreme high of the wick to the extreme low of the wick. If you close in that bottom 25%, it's the exact same thing, an indication to sell. So as we look at this chart here, well, once again, it looks very, dramatic here. There's nothing happening, but we have a bar that closes in the bottom 25% of its range. All right, now rule number 2. If all the rules of the strategy are met and we're closing in that bottom 25% of the range, we're going to enter upon the confirmation of trend. So what does that mean, the confirmation of trend? Well, here's our confirmation method in a nutshell. We're going to buy if price trades 1 to 3 ticks above the bar that closed in the top quarter of its range. So when you find a bar that closes in the top quarter, if you trade 1 to 3 ticks above, that's your entry point. Okay, that's the confirmation, because we're confirming that we're going higher. So as we look at these 3 bars here, well, we see that we want to buy right here, right above the first one that closed, but we never traded above there. We want to do this on the next bar, and you can see the very next 2 bars went lower. So this is why we wait for confirmation, because had we just bought at the close of this bar, saying, hey, well, Steve says this is an indication to buy, well, look what happened the very next 2 days. It went straight down. All right, and I'm sure you would have been, swearing at me and saying, this stuff doesn't work. Well, yes, because you didn't use the confirmation method. We want to confirm that it trades above that bar. It never did, so we didn't do anything. But here's another example. We want to enter above, and we did. We traded above on the very next bar, so we actually went up a little bit after that. Now remember, these could be monthly bars, so for all you know, this could be a 20-point gain. It doesn't matter. It still went up, as you can see. And then we have one last example where we close in the top 25%, but we can't enter until we trade 1 to 3 ticks above, which we did on the very next bar. So it's off to the races. So you see how simple this is. We're not listening to anybody. We're not looking at a ton of indicators. We're only doing one thing. We're learning how to listen to the market. Now the confirmation works the same way if we're going short. If we close in the bottom 25%, we're going to sell if price trades 1 to 3 ticks below that bar that closed in the bottom quarter of its range. So as we look at this example again, here's the bar that closed in the bottom quarter of its range. We're not going to simply sell at the market because we know that it may go right back up. We wait for it to confirm that it trades 1 to 3 ticks below, and then we go short, or then we sell. So as you can see, the very next bar traded below. Now remember, this is where most students, beginning students, have trouble. They say, well, Steve, why did you sell there? Why did you enter? Because we didn't close below there. I never said we have to close there. We only have to trade there. So we're still entering to go short. Even though we closed higher, it doesn't matter. The market is telling us that most likely we're going to go lower. And as you can see, look what happened. Once again, you see how simple this is when you just get rid of all that outside noise that holds no consistency and learn how to listen to the market. So let's see how these two rules apply to strategy number 4. Now remember, I can't divulge all the rules. There's only about 2 more left in the strategy, or 3 more left in the strategy, and I can't give them all to you because it wouldn't be fair to the people that have already purchased this. But you're going to learn all of this in my Emini College. All right, here's a daily bar, and it's a strategy number 4 setup. This happened in October. All right, as you can see, we closed in the bottom 25% of the range. All the remaining rules of the strategy were met. They were all the requirements were met, and you would have gone short on the next bar if you traded below that bar. And as you can see, it did. And so you had a very nice move to the downside and a very nice short setup. All right, that was an actual signal to go short. Let's go to a different time frame. A lot of you say, well, Steve, I don't trade daily bars. I trade, intraday. So here's an hourly bar. Strategy number 4, as you can see, this was in November. And as the market is moving lower, we're going with the market. In other words, we're never going to try and pick a bottom or a top. If the market is telling us it wants to go lower, we're going to sell as well. So these were all valid sell signals to go short on an hourly time frame. Now, once the market told us that it wants to go higher, well, now we turn into buyers. And these were all valid buy signals generated on a 60-minute chart. As you can see here, all the sells closed in the bottom 25% of the range, and we went short the very next bar. All the buys closed in the top 25% of their range, and we went long on the very next bar. How about if we go even down further? Let's go to a 15-minute time frame. This was about a month ago on the 6th of January, and this was the very first chart example I showed you at the opening of the presentation. So as you can see here, it looks like nothing is really happening, but what do we have? We have a bar that closed in the top 25% of its range, and all the other rules of the strategy were met. So we went short the very next bar, and 12 points to the upside in the next 2 or 3 hours on a 15-minute time frame. Let's go down even further. Let's go to a 5-minute time frame. This was on the 19th, about 3 or 4 weeks ago. This was on the 19th of January. All right, so strategy number 4 has deemed that we're in an overall downtrend. So that means we're only going to be selling. We're not going to be trying to pick bottoms. We're going with the market. We're always jump on the coattails of what the market wants to do. The market's in charge, not us. So look at all these sell signals that were generated. They're all closing in the bottom 25%, and we went short the next bar. Now, here's the only thing. We don't really have a lot of huge gains on this 5-minute time frame, but eventually, many times, if you stick with the trade, it all kicks in. And this is what happened later on in the day, towards the end of the day. Now, just to show you that we're not cherry picking the best examples, let me share with you what happened today. This was this morning. And I took this slide example just about 2 hours ago before I got prepared for the presentation. This was going down even further in time frame on a 1,000 tick bar chart. All right. So as we can see here, looking at this, this was the first 2 or 3 hours of the market. Excuse me. And so someone looking at this in hindsight saying, well, boy, what would I have done here? You know, first we were kind of going sideways to lower, and then we firmed up. So how would I have traded this on a 1,000 tick bar chart? Well, as the market was going sideways to lower, strategy number 4 generated all sell signals. Okay, these were all the sell signals that were generated in the first half hour to an hour of the day. But then the market kind of started to firm up, went sideways a bit to higher, and then once we were in a full-fledged uptrend, well, guess what? Strategy number 4 generated all buy signals. Now, I think this is a perfect example of what we mean by consistency, because not every trade here was a winner. In fact, this last sell signal, before we started to move up, most likely would have lost you money. Okay, you would have been stopped out with a small loss. And in fact, most likely this buy signal would have stopped out with a loss as well. But I think out of the 10 or 12 trades here in this first few hours of the day, I would say 3/4 of them were positive, were successful. So this is what we mean by consistency. 2 steps forward, 1 step back. We're not going to cherry pick and tell you that every signal works great. But look at the consistency and the ability to make it back, and usually make it back right away. This was just this morning, just a few hours ago. All right, we talked about strategy number 4. Let's go on to an entirely different strategy with entirely different rules. Now, I can't give you the rules to this one, but I'm going to share with you some very recent examples. This is strategy number 7. This strategy was basically designed just for trading the E-minis on a daily basis. Now, as we see here, this is the E-mini future coming into this last week, this last few days here. Now, on the 30th of December of last year, there was a buy signal that was generated, and we show you where we would have exited for roughly a 20-point gain in just about a week's time. Okay. Now, as we go forward, another buy signal was generated just about a month ago on the 12th of January. And as you can see, in about a week or two, you would have exited with a 25-point gain. Now, the beauty of this is that as the market is still headed higher, another buy signal was generated on the 31st. This was just a couple of weeks ago, a few weeks ago. All right. And you would still be in that trade if you were following the basic rules. So we don't know where the exit is yet. But you would have already had a good 10, 20-point gain in this trade. You could have exited part of your position. You could have exited wherever you like. Remember, you're in charge of your trading. You can follow the basic parameters or say, you know what, I'll be happy with the 10-point gain. I'm leaving. Okay, that's okay too. There's nothing wrong with that. The only thing that's wrong is that when you rely on someone or something else to tell you how to trade. We're just giving you the guidelines, the signpost, and sharing with you what has stood the test of time in terms of consistency. It's up to you how you decide where you want to exactly enter, where you want to exactly exit. Now, as I've just shown you, these strategies work great on the E-mini S&P, but you can also apply them to other markets, other futures. You can apply them to stocks as well as ETFs and the Forex markets. So if you like to trade multiple markets, if you're not just an E-mini trader, but a stock trader or a currency pair trader, well, guess what? You can still use these strategies on those markets and you'll still get the same consistent results. Let's show you some examples here. Here's a chart in NBL, all right, going back to the end of October. Look at the buy signals that were generated using some of these strategies, okay? Now that's going long on a stock. You can also use them to go short. For Under Armour, for UA, starting in September. Look at all the sell signals coming in as the stock went lower into the middle of November. These are the same strategies that we'll be teaching you in the course. So you can apply them to stocks. You can also apply them, as you can see here, using strategy number 1, which we'll share with you. This was a signal that was generated just about a month or so ago. And look at, you could have taken advantage of that with the same rules that we'll be teaching you in the course. Here's an Apple signal that was generated just about a month ago to go long Apple. Would you have liked to have seen this if you also trade stocks? There was a strategy number 4 buy signal. Okay, we just showed you a sell signal using strategy number 1. Well, here's the strategy number 4 buy signal. As you can see, we close in the top 25% of the range, and you would have entered the next day right here. And look what happened to Apple. Now, Apple has actually gone up higher than that. Now, we can apply these to crude oil. Here's an older chart of crude oil in October. A buy signal was generated, and you saw how the market went up after that. So you can apply these to commodities. You can apply these to currency pairs. Here's a weekly chart of the euro yen. Look at all the sell signals that were generated on the way down. So it doesn't matter what time frame, what type of bars you're looking at, what market you're looking at. Now, we're also putting in 2 extra bonuses in the college. So we're not just giving you all these great techniques and strategies and great ways to trade. We're also throwing in 2 tremendous bonuses. That's the ATM, which stands for Advanced Trade Management, and the PET D. So let's share with you what these are. Once again, ATM is something I learned on the floor some 40 years ago. It is probably one of the most powerful tools for managing your trading because it basically lets you know when you should be trading and when you shouldn't. For example, we've all been in situations where our strategy is working perfectly, all right? These are real life examples of trades that worked out perfectly using some of the strategies we'll be teaching you in the course. Everything just works fine. We all love it when this is the scenario and the environment we're going through. But oftentimes the environment will change. With the exact same strategies about a month or 2 later, this was the results we got with all of those different strategies. So what the ATM method does is that it's an early warning system telling you that you're going into this type of whipsaw phase in the market, and it keeps you out of trading. It's a great, great technique for managing your money. In fact, it's so powerful that we actually don't offer it as a separate course. It is only offered within the college. Now, along with that, we're also throwing in the PET D. Many of you have heard me speak about this before in past presentations. This is our most popular as well as powerful trading tool. It's not a strategy, it's a tool. It's the Primo Early Trend Detector. Remember, once again, I was taught this some 40 years ago. I've been using this for 40 years when it was first introduced to me on the floor. When I was introduced to it, we just called it the formula because it was a calculation that we had to calculate after every bar. And we couldn't do it on a 5-minute or 10-minute basis because it was too difficult to calculate. And then by the time you finished calculating, the next bar would be in pursuance, and then we'd have to calculate all over again. But now with the help of high-speed computers and programmers, we've been able to change it into a proprietary color bar algorithm. There's nothing you have to calculate. There's nothing that has to be done by hand the way I had to. It's right there in front of you. And so here's how it works. If you see a series of green bars, well, you're in a short-term uptrend. That's it. And if you see a series of red bars, you're in a short-term downtrend. It's so simple, but so powerful. Let me show you what I mean here. See how the markets are going higher. When someone looking at this can say, well, Steve, yeah, it's easy to see you've been in an uptrend. Well, sure, in hindsight, anything is easy. But would you like to know well back here that you were in an uptrend? Well before the rally started, the PET D was coloring these bars green. So as the sign says, the beauty of the PET D is that it tells you which direction you should be trading. And once you know the direction of the trend, you can apply any strategy to that direction. So even if you want to use a current strategy that you've been applying that has okay results but isn't doing that well, we feel that you can apply any method with the PET D, and it will increase your odds for success. Now, here's an added advantage. A little known secret that a lot of people don't know about the PET D is that you can also use it for long-term trading. Let me show you what I mean here. This is a monthly chart of the S&P index. All right, this is what the E-mini is based off of. This future is based off of the S&P, but we're looking at monthly bars. Each and every one of these bars represents a month, going back to 1995, some 22 years roughly. Okay, and we see all the peaks and valleys that have happened in the market going back over 20 years. In other words, when the market took off from the 90s all the way up till the end of the decade, we reached the top and we got to the dot-com top and the crash that happened after that. Okay, it was devastating. The market went straight down. A lot of stocks went all the way down to zero. Okay, then the market firmed up in 2003, 2004, went back up all the way to those old highs. But then guess what? The financial crisis hit in. Okay, the banking and financial crisis. We had another devastating crash along with a recession. People were laid off. Markets, just dried up. It was a very terrible time. And then in 2010, the markets have firmed up. And we've gone all the way back up to new highs in the market. And people are starting to wonder, have we topped out, or are we going to go higher, or is there another crash in place? Here's how the PET D can help you with your long-term investments, for your IRA account, for your long-term portfolio. You simply apply the PET D, and if you get 3 or more bars of a different color in sequence, that's telling you that the trend has changed. So as we see here, all along the way in the late 90s, we were going up. We had 1 red bar, but that's not enough to tell us that the trend changed. But once we had 3 red bars, we're out of the market, and we would have missed all of this downslide for the next 2 years. Then in early 2003, we get 3 green bars. So we're back in, and we were long the entire way until the end of 2007. Well before the crash started, we are out of the market, and we missed all of this downslide here. Then in 2009, the end of 2009, 3 green bars appear, and we're in the market, and we have been ever since because we have not had 3 consistent red bars. But wouldn't you like to know when we're going to have the next 3 red bars so you can be out and possibly miss the next crash and the next bear market for the next 2 or 3 years? That's what the PET D can do. But remember, it's a proprietary tool only found at Specialist Trading and Pro Trader Strategies. All right, so let's go over the curriculum before we go into question and answers. Remember, we talk about the foundation of the E-mini. Then we spend the next 3 weeks live classes talking about strategy number 1, our best pullback strategy in terms of consistency. Strategy number 4, our most popular strategy and our most consistent strategy. And then a popular strategy as well, strategy number 7. Then we go into week 5 where we go all into how to use and apply the PET D with your trading, with any type of trading. We also give you different techniques to apply the PET D with. And then lastly, the last week of live classes, we talk about ATM, Advanced Trade Management, how to figure that out, and we put it all together. Any questions that you may have. 6 weeks jam-packed full of information that I've accumulated in 40 years. We give it all to you in 6 weeks so that we can shorten your learning curve. One thing we don't talk about because we don't want it to be misused, but we also provide you for a limited time with email alerts. For example, here's an email alert that was generated on the 23rd, sent out to you for entry on the 24th. All right, as you can see here, if you're a member of the college in the courses, you would be receiving this on the night of the 23rd that said strategy number 1 has generated a new signal. It will tell you where to go long, where to get out, where to exit, where to place your stop using the standard basic format. But just so that you can check your work, because we send these to you as educational tools so you can know what to look for and know if you spotted it already before you got the email alert. So here was the 23rd when the strategy number 1 buy signal was generated, and look what happened. I believe about 25 points in 2 days after that using strategy number 1. This was just a few weeks ago on the 23rd that this strategy generated a buy signal. So we have tons of testimonials where people have taken our colleges in the past. They've turned from traders who were never able to make a dime to consistency in their very first time in years. And you can go to our websites, Pro Trader Strategies and Specialist Trading, and see all of the different testimonials that are on there, okay? So let's recap. Remember, we are an educational company. We're going to teach you how to be non-subjective. You're not going to rely on these outside sources anymore so that it clutters your thinking and gives you different ideas than someone else. It's going to be cut and dry. It's going to be consistent too. This means we're going to allow for small losses from time to time, but that's okay because we feel confident for the very first time in our trading that we're able to make it back. We're also going to be as simple as possible. Don't worry if you haven't traded a long time or you've never been this type of a trader. You've always relied on taking a signal service or something. It's extremely simple. In fact, if you go to the testimonial page on our website, you'll see how people just marvel at how simple our techniques are. So it doesn't matter if you've been trading a short time or are new to the E-minis. It's extremely simple to learn these techniques, and we go over in detail how to trade this. And lastly, and most importantly, we show you how to become a part of the process. Remember, in my opinion, in 40 years of trading, this is the only thing that will make you a consistent trader, by making your own trading decisions. But the reason why we as most traders don't do that, myself included when I first started, is because we rely on someone or something to tell us how to trade. This is what we've always been taught, right? We got to go to some signal service, on a website, or we have to, follow whatever the indicator is telling us. That's taking yourself out of the game. That's basically saying, I don't know how to do this, so I'll rely on you to tell me what to do. Well, you should never be involved in anything, especially with your hard-earned money, relying on something to tell you how to trade. You should be making your own decisions. The reason why the majority of traders don't is because they've never been taught how to. This is what we do in the college. We teach you how to be in charge of your trading, how to take control of your trading destiny, and how you can become a part of the process. So, once again, we are an educational company. Our goal is not to force feed you signals. Our goal is not to tell you trade this time frame. This is the only way you should trade, this time frame in this market. We don't believe in that. We believe in giving you all the information, all the knowledge that has worked for me over time, and hopefully it will be able to work for you. Now, here's what's offered in their college. Once again, 6 weeks of detailed instruction, live classes, 3 proprietary strategies with all the exits, all the entries, all the stops. We provide you with signal alerts for a limited time, the weekly live webinars, the ATM, the PET D, full access to all the strategy rules, and mentoring correspondence with myself. You can always contact me via email if you have any questions, and you get instant access to all of this. You don't have to wait for anything. Now, there is so much information in this 6-week detailed course. I mean, it's worth over $12,000. That's how much information and a course value you have in this, okay? But we're not going to offer this for $12,000. We know that that would be way too much. In fact, we're dropping it almost 60%. We're discounting the price down to $5,000, but we're not stopping there. We're actually going to discount it more, an extra 10% off that, down to $44.95. So if you want to lock in and lock in on this college, you can lock in at that discounted price for $44.95. But we're also taking an extra step to help you become a member of my trading college. We're going to offer a payment plan, okay, but it's different from most payment plans. We're going to do what works for you. It's a pay as you learn type of payment plan. So you can put down an initial deposit and then pay as you learn. So you don't have to come up with the large lump sum of $44.95 if you don't want to. You can just start up with a payment plan and then pay as you go. It's a great way to structure your payments, and you can do this with whatever works for you once again. So the best way to do this is to contact Pro Trader Strategies. They're my sister site. They manage all of my courses and all of my colleges, and they can put that payment plan together for you, or else they can lock you in at that price of $44.95. Okay, remember, the course starts in the next week or two. So we're going to be going live in the next week. There's limited space available. If you want to get in with this great payment plan, now's the time to do this. So for one lump sum, you can take that charge of that pay-as-you-learn payment plan, and you can be up and running and in the course. So here's how to take advantage of this. Remember, contact Pro Trader Strategies. You can either email them at trading@protraderstrategies.com or call them directly for that payment plan. All you have to do is just give them a small deposit and you're still up and running. 310-598-6677. Now the link to the course and to that locked in price is right there below, but it's not a live link. But if you look at the chat box on the far right of the GoToWebinar column, you'll see that they've posted a live link there, and you can click that off for more information. But remember, you must act quickly, either by locking in at $44.95 or getting involved with the pay-as-you-learn payment plan, because classes are going to be starting very soon, and we only have a limited amount of spaces left. So we like to keep these. We don't want to keep these for 200, 300 type of colleges. We like to make them intimate and more of a classroom type of setting, okay? So I'm going to leave this information up here, and I want to thank you. If you have any questions, I will open up the question and answer box right now. And remember, once you become a student of mine, you are a student for life. So I don't want you to think that, well, boy, after 6 weeks, I'm kind of left on my own. What if I still don't get it or I'm having difficulty? You're still going to be able to contact me whenever you like, okay? As long as I'm alive and kicking, you can email me and ask me any question you like. We have some people that took a college course with us about 3 years ago, and they still send me emails from time to time with just different ways of fine-tuning their trading and different questions they had. So there's lots of ways to always get answers to any questions that you may have. Once again, contact Pro Trader Strategies. They handle all of the promotions and all of the discounts. They can set you up with that unique payment plan. So we can set up a deposit, whatever works for you. And then you can simply take the pay-as-you-learn payment plan. So you can pay as you go, as the courses go on. So it's a great way to be involved with not having to put down that one lump sum, okay? Well, I guess everyone must be signing up and joining right now, because I see there are no questions. And so we'll just kind of take it from here. I'll leave this information up here for you to take. But as we close, in conclusion, remember, I just want to state, I know if you're struggling with your trading, regardless if it's E-minis or stocks or currency pairs, I know what it feels like. I've been there, okay? My first 2 years, in fact, on the floor, I didn't think I was going to be there much longer because I couldn't make ends meet. I would have a great week or even a great month, and then it would take one trade to wipe it all out, and I'd be right back where I started. So I was lucky enough to have a couple of traders come up to me and see how discouraged I was and turn my trading around. And that has made all the difference, because 40 years later, I'm still here trading. And that's what I want to do to you. If you're having difficulty, or if you're just not able to get past that barrier and you're just only doing so well with your trading, please, I can't stress enough how much this course will help you. You can see all the testimonials on our websites, how it has changed so many traders' lives around. And we're different from most courses because we're not telling you, oh, we have the number one system, we have the number one technique that no one knows about. We don't believe in that. We're just trying to give you education that has stood the test of time and have you in charge, okay? We want you to make your decisions for the very first time so that you can be in charge of your trading and not have to rely on these outside sources. So if you're really serious about taking your trading to the next level and becoming consistent for the first time, please do yourself a favor, contact Pro Trader Strategies, take advantage of this great pay-as-you-learn payment plan, and I'd love to see you in the college course in the next couple of weeks, okay? I want to thank you so much for attending. I wish you the best of luck, and I look forward to having you as a student of mine in the Emini College. Thank you so much. I'll see you next time. Bye-bye.